The conflict between Ripple Labs, the company that developed XRP, and the Securities and Exchange Commission of the United States has caused shockwaves to be felt throughout the financial technology sector. This conflict occurred in a world that is becoming increasingly controlled by digital currencies. This legal dispute is not limited to a single corporation or a single form of digital currency to choose from. An important turning point that has the potential to shape the regulatory environment for the whole cryptocurrency industry is represented by this event. As our investigation into this matter continues, it is of the utmost importance that we investigate the consequences of this case and think about what it implies for the future of digital currencies. XRP was initially offered by Ripple Labs, which was established in 2012 with an ambitious ambition. By utilizing digital currency and real-time payment technologies to bring about a transformation in the global financial system. When compared to Bitcoin, which was intended to be a decentralized digital currency, Ripple was developed with the intention of collaborating with financial institutions in order to make international transactions more secure, faster, and more efficient. Through its role as a bridge currency in RippleNet, XRP makes it possible to conduct international transactions and currency exchanges without any complications. XRP has been positioned in a way that is unique within the realm of digital finance as a result of this role, which highlights its utility beyond that of a simple store of value. Ripple has a crystal clear vision, which is to enable a world in which value can move as freely as information does at the present time. This is a notion that, if completely realized, has the potential to reimagine global finance. A lawsuit was filed against Ripple Labs by the Securities and Exchange Commission in December of 2020. The lawsuit accuses the business and its management of conducting an unregistered securities offering with XRP that was worth $1.3 billion. XRP was sold to residents of the United States as an investment without complying with federal securities laws, according to the Securities and Exchange Commission (SEC). Significant ramifications were caused in the cryptocurrency markets as a result of this action, which resulted in a number of exchanges delisting XRP, which caused its price to collapse. In the immediate aftermath of the event, doubts were raised over whether or not cryptocurrencies should be classified as securities or commodities. Ripple intends to defend itself by arguing that XRP is not a security but rather a currency or a medium of exchange. This is the central premise of Ripple's defense. They are referring to the Howey test, which is a test that is utilized by the Supreme Court of the United States in order to assess whether or not a transaction is considered to be an investment contract. If Ripple is able to successfully claim that XRP does not fit the parameters of this test, it has the potential to establish a significant legal precedent. This precedent may possibly exempt other cryptocurrencies from similar securities classifications and alter the regulatory environment. The market value of XRP experienced a significant decline as a result of the lawsuit filed by the SEC. Despite this, Ripple Labs has made a concerted effort to reassure partners and investors through its efforts, drawing attention to their legal position and the fact that they are continuing operations notwithstanding the litigation. It has been observed that there have been shifts in trading and investment tactics, with a shift toward more cautious in the cryptocurrency market, particularly with regard to coins that have unclear regulatory positions. Many regulatory authorities around the world are studying the implications of the Ripple SEC action for their own crypto regulatory frameworks. This is because the lawsuit has captured the attention of regulatory agencies all around the world. There have been nations such as Japan that have acknowledged XRP as a cryptocurrency, not a security, illustrating the inconsistency that exists in the approaches taken by worldwide regulatory bodies. The diverse views from throughout the world could potentially have an impact on the formulation of future global policies, which could ultimately result in more standardized financial rules. The Ripple case has the potential to become a watershed moment in the development of cryptocurrency regulation, according to the opinions of legal experts. They make predictions about a variety of outcomes and the ramifications those outcomes will have for the market as a whole, drawing comparisons with prior financial events. The steps taken by the Securities and Exchange Commission (SEC) are viewed by some as an overreach, while others argue for more stringent restrictions to safeguard investors. Legal perspectives are divided. The lawsuit filed by Ripple against the SEC has enormous repercussions for the economy. The cryptocurrency market might be boosted by a resolution that is favorable to Ripple, since it would provide clarity and confidence, which could potentially lead to further adoption and innovation with the cryptocurrency. In the opposite direction, a decision that is unfavorable to Ripple could result in stricter rules, which could potentially stifle growth and innovation within the sector. The entire landscape of digital currencies could be on the verge of going through a tipping point, which means that the economic stakes are quite high. The sentiment of the community and investors about Ripple has demonstrated a variety of distinct reactions. There have been numerous methods in which the cryptocurrency community has come together, with many individuals showing their support for Ripple through public remarks and social media campaigns. With that being said, investor mood continues to be cautious, which is a reflection of the uncertainty surrounding the outcome of the case and the ramifications it will have for the market as a whole. The intricate relationship that exists between regulatory measures and market dynamics in the cryptocurrency field is highlighted by the conflicting reaction that has been expressed. The verdict in the lawsuit brought by the Securities and Exchange Commission against Ripple might establish a precedent that either encourages innovation by establishing clear regulatory parameters or stifles progress by imposing restrictive measures. According to the interpretations of existing financial rules that are applied to digital currencies, the future of cryptocurrencies could be greatly dependent on the outcome. It is necessary for innovators and regulators to strike a balance in order to successfully navigate the thin line that exists between promoting technology innovation and safeguarding the interests of investors. As we consider the repercussions of the lawsuit filed by the SEC against Ripple, it becomes abundantly clear that the case represents a pivotal moment for the development of the cryptocurrency landscape. It is highly probable that the ultimate ruling will have an impact not only on the future of Ripple and XRP, but also on the regulatory approach that is taken toward digital currencies all over the world. For the purpose of successfully navigating these regulatory waters, smart strategy and forward thinking will be required. Not just from companies like Ripple, but also from government authorities and members of the policymaking community. Those who specialize in financial technology continue to have conflicting opinions regarding their forecast for the future of digital currencies. While there are those who believe that clear regulations will lead to a prosperous future, there are others who are concerned about the possibility of regulatory excess impeding innovation. As the Ripple case continues to develop, it will definitely serve as an important study for investors, regulators, and the global financial community. It will also serve to establish the tone for the future interactions between the law and the innovation of digital currencies.